Welcome in, everybody. We are live, and this is our pilot edition to what we hope to continue every Wednesday. So this is just going to be our Let's Talk seminar, and today we're talking about credit. So my name is Shiretta Clark. I am a licensed loan officer with Sistar Mortgage, and I am really enjoying everything about helping you all achieve your goals of home ownership, whether that's a first-time home buyer, second time around, want to get into investment or commercial property. I am all here for you guys. So one of the biggest questions, one of the largest barriers that I find, and this is why we have chosen credit to be the first topic, is credit. So obviously everyone knows that credit is one of many components to getting a mortgage, and that is why we wanted you guys to have an opportunity to listen to two very skilled speakers and heavy hitters in the game. And I will pass it over to Ashley. I'm going to stop sharing my screen. We are live on Facebook. We will be live on YouTube, and we are doing this through Zoom.
Hey,
I'm sorry, this is being recorded.
Okay. Hey, everyone, I'm Ashley Rogers. I am a licensed realtor here in Birmingham, Alabama. However, I serve the entire Alabama. I'm with Norman and Associates. If you guys ever need any assistance with finding that home, I will be happy to help you guys.
Awesome, awesome. So with that, I'm going to hand it over to Sherry. She is the 850 credit queen herself, and she has prepared a presentation for you guys. So it'll go, we'll try to keep it at this best we can so that we can get what we need in a timely manner, and also give you guys an opportunity to ask questions live in the chat. And also, if you have questions that we can't get to, fret not. We will go through in the end and make sure that we reach out to you all if you provide us with your contact information. So first up, it'll be Sherry. She'll have 15 minutes to speak to you guys and about 15 minutes to answer questions. We have a moderator in the chat who will be pulling questions and pinning them to the top for the speaker. So just kind of be patient with us. So without further ado, I will turn it over to Miss Sherry.
I thank you so much. Thank you, guys. Welcome everybody. You know, you could have been anywhere on a Wednesday evening, but you chose to be here with us, getting yourself educated. Like she mentioned, I go by the 850 credit queen because I actually have an 850 credit score. And I want to let you guys know that this kind of happened by accident. And I'm going to go through my presentations, just so you guys can understand what it is that makes up credit and how I actually arrived to this score. And Ashley, I'm just gonna ask you if you're able to see my screen where it says Credit 101. Is that showing clearly? Everybody can see that?
Yes, it's showing clear.
Perfect. All right, so what I want to talk about is your credit and how we actually calculate the credit score, right? So I always believe in giving knowledge and giving information. I feel like a lot of times people have poor credit and they factor and focus on the negative, but they don't think too much or worry enough about the positives, right? What are some of the things that you can do to actually increase your credit score and have a good score, like have a good understanding of your score? And I think it all begins with the education and knowledge, right? So there's 5 key factors to increasing your credit score, just knowing how to calculate your credit, right? So we have the biggest area, which is based on your payment history. So your payment history is basically sticking to your due date, right? So if you have a due date of April 30th, I like to caution people to go ahead and set up those order pays and get that done even 15 days before the due date, right? So that's one of the things you want to do. You want to have a system where you're able to pay your bill, whether you're old school or you're new school like me, where I use my cell phone as a reminder for my payment dates, or you want to jot it down on the calendar. This is something that you want to take heed to because it's 35% of your score. And if you don't have a system where you're able to pay your bills on time every month, you will start to see a decline in your score. So it really starts with just having that key organization. Then we want to go over to the amounts owed, right? A lot of times people don't really know what this means, but what it basically means is they give you a credit limit. And if they give you a credit limit of $1,000, you want to keep that to about no more than $300 to really have that superb credit score. You want to keep it to nowhere more than $100 of that $1,000 limit. So you want to keep that percentage very, very low. So that's your credit utilization. That's 30% of your score as well. The next biggest area is if you go over to where it's in the red, it's your credit length of history, right? And a lot of times your length of history, it will vary. You know, it can go anywhere based on when you first start credit, or they'll take an average of your oldest account with your newest account. And what that really means is that you want to make sure that you are not closing unused credit cards that have a large credit history, good credit history as well too, right? So if you have a card that you may have had since like 20, let's go way back, 2005. If that card is in good standing, you want to keep it open because it's going to keep your length of credit history pretty relevant and keep that score high because you're using that 15% and you're not closing unused credit. Next area you want to go over is credit mix. And what that basically means is you don't only want to focus on credit cards only. You want to have a nice healthy mix. You want to have some credit cards, you want to have some installment loans, and your installment loans is going to be car loans, mortgages, also student loans. A lot of people I know, they say, I hate my student loans, I want them gone from my credit. But I'm here to tell you, if they're in good standing, if they're not in default, then those student loans are actually helping your credit because it's giving some kind of history to show that you're credible of paying something back on a timely fashion. And let's talk about new credit inquiries, right? So a lot of times you're standing in line in some of those stores and they're asking you, do you want to apply for a Victoria's Secret card? Do you want to apply for a Gap card? Those store cards. Nothing wrong with getting them, but if you get too much hard inquiries on your credit report, then that's going to create an alert to say that, you know, you are pretty much using a lot of inquiries. You're looking desperate to creditors. So you want to make sure that you're planning and budgeting when you're actually going to be applying for new lines of credit. And I know we're talking along the home lines here. So if you guys are in the process of buying a home, you do not want to continuously keep applying for new lines of credit. So I hope you guys got some value from that. I want to explain to you that 1 in 4 Americans have a credit score less than a 650. Depending on the state that you're in, you're going to need close to a 650 or higher to get that good interest rate when purchasing a home. So I want you to consider that. And my next slide would break down that information for you, right? So let's talk about how does bad credit versus good credit, how does that weigh on your credit score? Now, keep in mind, these numbers are outdated, you know, and it might vary based on where you live. I'm from New York, and we're not going to find much homes for $240,000, but this is just an example, right? So if you have a home that's $240,000 and you have a 30-year fixed mortgage on it, look at the difference that you could be saving just from having good credit. I love to show this screen because this here is almost $1 million, where somebody else is going to be paying $413,000. So it pays to know this information. It pays to have good credit because it's going to save you in the long run. So the difference here is almost 3% in the interest rate, right? And like I said, these rates are definitely not reflecting what it is here now in 2022, but it's something to think about because regardless of what the rates are, regardless of what year we're in, you're going to save more by having good credit. And let's talk about having a car. It's the same idea, right? So most car loans, it might be 5 years, depending on whichever you choose. But the same thing here, you're going to be able to save yourself over $12,000 in interest because you have a higher credit score. So it really, really just pays, guys. And then the next screen I have, it breaks down overall, right? So these are some of the things that we tend to have our big purchases on. We have a mortgage, we have credit cards, we have personal loans, auto loans, and there they go, the student loans, right? And if you look, pretty much it's just telling you the difference between a fair credit score versus a good credit score and the amount that you can save, totaling $56,000. What can you guys do with $56,000? There's a lot you could do with $56,000, right? So I know some people have student loans up to $200,000. You could use that 56 to pay down your student loans. You could use that as a down payment on a home. You can do whatever you want, but this is the value when having good credit. You can save money in the long run. So I want you guys to say long run, right? I want you to think about this as a long aspect. It's not something that's going to be done overnight, right? And because I'm a teacher, I failed to mention that in the beginning. I always love to give examples and love to help people understand how does this credit really work, right? So read over the scenario with me really quickly. So we have Lisa. She has a new credit card. She received it in the mail last week. Her credit limit is $1,000. She's excited. She went shopping and she spent $625. So her bill due is approximately 30 days later, and the minimum payment is $25, and her interest rate is 17.5%. She also would get a late charge of $35. Lisa forgot to pay her bill. So using the screen that I showed earlier in the presentation, how do you think this will impact Lisa's score? And I know I probably can't see the chat, but I'm going to assume some of you guys are going to say her score is going to drop, right? Definitely her score will drop, right? If you look, if she's spending $625, that means that Lisa's up to close to 60% of her credit utilization. And prior, when I started this presentation, I said you should not use more than 30%. So she's way over that limit, right? She also forgot to pay the bill on time. So not only is she going to be charged a late fee, but she's also going to get a decline in her credit score because that's going to be 130-day late payment, right? And these interest rates, one way, guys, if you're taking notes to avoid interest rate, is to pay your bill in full, pay your bill on time. If Lisa went ahead and paid the $625 before her due date, then guess what? She will avoid paying a 17.5% interest rate, and she also avoid a late payment, also avoid her score from decreasing, and she will also decrease her utilization, which would keep her score pretty normal. So guys, you want to make sure that you're not overspending. That's the idea of this screen right here. So let's talk about what Lisa could have done. I have some explanation here, right? So her late payment, did you know, guys, that late payment sometimes can drop your score anywhere between 50 to 100 points? Her credit utilization, like I mentioned, it should be definitely lower to 30%. And what did I say? Lisa is fairly new to credit. So what does that mean? She just ruined her credit history. She's fairly new to credit, and here she goes spending it, running it up, right? I recently had a friend of mine told me, Sherry, why would they offer you $1,000 if they don't want you to use $1,000? So I know a lot of people are under the impression they give it to you and they want you to use it, but guys, no, they want you to be responsible. And that's one of the things with credit is, right, they want to see how responsible you are. Can I trust you? How credible are you, right? If I give you $1,000, are you just going to run out and spend the entire thousand, or are you going to learn how to budget and manage that, right, guys? So you want to know that lenders want to know that they can trust you, especially when it comes to giving you a mortgage, right? So let's talk about what some tips and things that Lisa could have done, right? She could have set up auto pay, like I mentioned before. We all know she could have spent less than $600, but Lisa was excited, right? And this is my favorite one because nobody ever guessed this, but I say to Lisa could have returned some of those items back to the store, guys. It seemed like Lisa may have made an emotional purchase. She just got excited, decided to spend a whole bunch of money because she got access to a whole bunch of money, but it's okay, guys. It is okay to return some items, create a budget and create a shopping allowance. It's okay to reward yourself, but what you don't want to do is overdo it, right? You don't want to do it where it's going to cost you your credit score. And just so you are aware of what credit scores and the levels are, right? Anywhere between a 300 and 579 is considered very poor. If you're in a 580 to the 669 area, I want to say that's a pretty fair credit score. Anywhere above 670, 739, you're hitting that good area. If you're a 740 to 799, definitely very good. 800 to 850, that's super exceptional. Very rare that we have a lot of people that's in that category, but it is possible. Once you follow the system, follow the screen that I showed before on what makes up your credit score, it makes it a lot easier to manage. And just so that you know, when purchasing a home, you want to focus on your FICO score, right? So your FICO score is a score that they're going to be using when they're running for your mortgage loan, right? So that score is going to range anywhere between 300 and 850, right? Your score on Credit Karma is not your FICO score. That is your Vantage score, and it's going to run a different algorithm. So you want to get in tune with that. And I'm sure when you guys get with your loan officer or your realtors, they'll be able to guide you in that direction. But I want you to understand that the higher the score, the better you look to borrow with. So you want to make sure that you are looking good and be prepared when it's time. I'm just going to recap and show that screen one more time. If you haven't gotten a chance to take a picture of it, please do, because understanding these 5 areas is going to help you take control of your credit, take control of the habits that you need to change, and just be in better control of your finances. Before I go, it would be a shame if I wouldn't plug myself. But like I said, I go by the name 850 Credit Queen, and I think I have about 1 more minute. I just like to share this story because this story is the reason why I ended up with this score. Is one of the things that I learned. I'm from the island of Jamaica, and my parents, they're immigrants, right? But they came here looking for the American dream, wanted to buy a home, wanted to do better things, but they didn't understand credit. But one of the things my mom understood was that if you use money that you borrow, you must pay it back, right? So she instilled something in me that it stood with me till today. And I always tell this story when I do my presentations because I feel like it would help someone. But my mom's favorite store is Macy's, and she would always go to Macy's to purchase perfume. And one of the things that she would do is she had her Macy's card, and she loved to use a Macy's card because you get discounts when you use the card. But she will always turn around if her total was $150, she'll turn around to the cashier and she'll pay that $150 bill immediately. And as a young kid, I didn't understand it. I thought it made no sense. I said, what is she doing? I don't even think a bill is generated. I think she's confusing the system. But one of the things that mom was doing was she was cutting her utilization, guys. She was cutting her utilization. She was definitely going to have an on-time payment because she paid it right there in the store. And she was making sure she was keeping a credit score. By me doing that, it gave me the attitude and morale to know that if I don't have the money to spend, I don't swipe it. So the only time I swipe my credit card is when I know there's money in the bank to transfer over, whether it's a week or two, I know I have the money to pay it. That's the only time I use my credit card, is when I know there's money to pay it. So that it taught me to be responsible. So when I went to buy my first home about 3 years ago, my mortgage lender said to me, my loan officer, sorry guys, he said to me, young lady, you have excellent credit. And I had no idea because I didn't even know what credit was. And at that time, my score was at 847. And he said, I don't know how you did it. And I'm like, I don't know how I did it. But one gem that I want to leave before I go is my mom didn't get to do this for me, but her habits definitely instilled in me. But make sure if you guys have great credit, add your kid as an authorized user. By the time they turn 18, they won't have a problem going to buy their own car, buy their own home. They'll be able to do anything they want because they have leveraged a system using your good credit. So that's my time. I hope you guys got some value from this. I'm going to stop sharing my screen. If there's any questions, I believe I take them now or at the end, but that's it for me. Thank you guys.
Awesome. Thank you, Sherry. I love the end, that gem, you guys. I hope you wrote notes. I meant to tell everyone, I said it in the chat that we had prior to this, for those who were invited to come out and listen. Please take notes and carry those on with you. It's a lifesaver, some of these gems that she has just dropped. So yeah, so right now we're gonna pull some questions from the chat. There should be one being pinned with momentarily. Sherry, are you able to see the chat? If not,
Is it here? Is it here in
No, it's on Facebook, and it's okay. I'm going to read them, or either Ashley, you can read them if you can see them, but I don't have an issue reading them. I'm looking at them right now. 1 second, I'll pull one.
I can go ahead and read one of them. From JBZ, does making multiple payments per month on credit card payments help your credit score?
Absolutely. So one of the things that like I said, I transfer money a lot of times, but you want to check with your lender, because I've heard recently one client told me that she wasn't able to make more than 2 payments, whatever bank she was banking with. So you just want to check to see. But a good rule of thumb is you want to pay half your credit card bill 15 days before the due date, and the other half 3 days before the due date. That sometimes trick the system to make you think you're paying 2 payments, and that can help your score if you do that consistently, like 3 to 6 months, and see how that works for you. But you do want to check with your lender, because not every bank is going to allow you to make multiple payments on your credit card bill.
Okay, I don't think we have any other questions in the chat at the moment. I feel like they're gonna come at the end, Sherry. If you don't mind sticking around, I may just kind of let you guys tag team if that's okay.
That's fine. I'm here. Thank
Right,
you, guys.
perfect. Okay, so guys, I don't know, do you feel like you need a 3-minute break, Jonas? Or are you ready to come in? I'm going to introduce Jonas Mitchell. He is another heavy hitter in the credit repair financial literacy game. He is the CEO, co-founder of Scribble. A few of you guys are already in the know of him when you reached out to me about wanting some help with your credit. So maybe this is the man behind the conversations on the phone, or maybe you spoke with some of his members of his team. So if you're ready to go, Jonas, I'm ready to have you.
Yes, ma'am. Let's get it. Let's do it. All right. So first of all, man, did Sherry kill it or what? Great job. You just saw me over here nodding my head like, yep, go. You right. So love it. And so I love what she did too, because what she did was she kind of walked through a lot of essentially how credit works and what happens if you happen to fall off the wayside, or what happens if you have great credit, right? So what I'm going to talk about today, really, and let me share my screen so that you guys can see it. Hold on here. Let's see. Slideshow. And I'm just going to switch it. Bam. All right. Can you guys see my full screen? Just throw me a little confirmation if you can, Sharetta.
Yes, I'm sorry. Yes, I have you.
All right, good to go. All right, so today what I'm going to talk about is primarily the home buying process and who you should have in your corner when you get started. So I'm the credit guy, so this is obviously going to be credit focused, but at the same time, I want you all to understand exactly what is going to be happening when you're getting started, because most of the time, and I don't know if a lot of you know this, but number one, credit affects about 38% of the population that would love to buy a home, but they just can't because of their credit scores. But then I ran a poll and, 33%, 32% were affected by debt to income ratio. And then another 34% were affected by the down payment. So it's not just credit that holds people back. And so we're going to kind of talk about that here in this one, just to make sure that you guys are fully ready and ready to go. Because at the end of the day, yes, I love credit, but if you get your credit prepared or, ready to go and you're not ready everywhere else, that's really not going to help you very much. So that's kind of what we're going to talk about here today. Okay. With the emphasis on credit. So here we go. Down here, if you look at this little logo here, there's three people standing around this nice little triangle. And I decided to make the logo very inclusive because, it's 2022 and all. So we have, a nice professional Black gentleman at the bottom. And then we've got a nice professional white guy over here. And then we have either an Asian or a Mexican or however you would like to look at it, professional woman on the other side, because obviously anyone can help you in this and love that we are in that place. But the reality of it is that it really does take three professionals to make sure that you're 100% ready. Now, I love what Sherry mentioned earlier. She went and spoke to her lender and she was like, what? I have an 840 credit score or 847 credit score? Didn't even know how that happened. You'd be amazed at how many people limp in to great credit, right? They pay their bills on time, they open up a few accounts, and then everything is good. So what we're going to cover in here is exactly what you really do need to do if you're one of those people who actually has no idea how to get to that 847. We're going to talk about that today. But first things first, most people think that the pre-approval application is exactly what you need to get started. Now, truth be told, there's no real estate agent, or at least no smart real estate agent, who's going to put you in their car and drive you around looking at homes all day long if you haven't gotten pre-approved yet, right? Reason being, if you find a home that you love, you won't be able to make an offer until you have that pre-approval letter. And so the way that the homes are going today, the homes are on the market for maybe a week. So you get out there, you show, you take a look at the home, you're like, oh, I love it. Let me go talk to my lender. Now, all of a sudden, you've got to go through the process, gather your documents, make sure you have everything right. There's a process that goes into getting ready. So that home's probably going to be gone by the time that you get everything set. So you need to get pre-approved. So for the real estate agent professional, this is step one. But for you, the consumer, the person who's actually going to be buying the home, that's not step one for you. Because the reality is most people don't understand credit. And I wish it was more people like Sherry, where you accidentally just had amazing credit. But in reality, that's not the way it works. Most people, they have parents where their parents got burned. And because their parents got burned, they're like, oh, you know what? I'm not touching credit cards. I'm not touching anything. And maybe they went to school, so they have some student loans, and that's all they have. That would be amazing. But as Sherry mentioned in her slide, and now on my next one, 30% of your score comes from credit cards, guys. So if you have no credit cards, you're missing out on at least 30% of your score. You have nothing that's going to come in there, and your credit score is probably not going to look very good. And I deal with those type of people all the time. Okay. So if you want to purchase a home, what I recommend, this is just my recommendation, the very first thing you should do is speak with a credit professional. Don't go directly to your lender. Don't go directly to your real estate agent. You actually want to go and speak with a credit specialist. Reason being is that credit specialist actually can pull your 3 credit reports, and those credit reports will actually tell you everything you need to know about your debt to income ratio, because that only covers the information that's reported. So your installment accounts and your revolving accounts. Revolving accounts simply means that it's an account where you can swipe your credit card, pay it off tomorrow, swipe it again if you want to, pay it off again as many times as you want. That balance can go up and down. That's a revolving account. An installment account is more like a loan where you can borrow the money one time and all you can do is pay it back. Even if you refinance that loan, they pay off the original loan and start a whole separate loan for you. So you can only borrow the money one time and pay it back one time. So your revolving accounts and your installment accounts are the only thing that count towards this debt to income ratio. It doesn't count your cell phone, any grocery shopping. It doesn't count your utilities. None of that stuff matters, okay? So if you want to go conventional, which I highly recommend, you need to have somewhere around a 43% debt to income ratio. And again, that credit specialist can walk you through that. And then lastly, you can talk about how to save for a down payment if you're not someone who naturally just has 15, 20 grand sitting in your bank account, okay? This is all about education. We show you from the very beginning, step one, this is what you need to do. So for you, we want to start with this foundation. The first person you need is a credit specialist. The next person you need the money, right? There are not that many people walking around with hundreds of thousands of dollars just sitting in their bank account where they're going to go and buy a house. So you're going to need to get a mortgage, all right? That's where the lender comes in. That's that second person. So your loan officer is the person that you go in, you fill out that pre-approval application. They will let you know exactly what you need, and they'll walk you through your different loan packages that you're able to get. I'm not going to go through that right now. And then after you get your pre-approval application, then you go and speak with your real estate agent, and that's where that person's going to take you to through the rest of the way to make sure that you get into settlement. Now, it's very important that you choose a very good loan officer so that they can make sure that that you get into the right package, and you need the right real estate agent, because you have to understand that there's three things that you need to do in order to buy a house. You need the right price, the right location, and the right condition of the home. You also need to be able to write an offer that gets accepted, and you also have to make it through home inspection. So it's imperative that you choose a very good real estate agent to make sure that they're going to get you through to the end. Okay. So then you get to settlement. So over here is where most of you are starting. You start with a credit specialist, you speak with your loan officer, and then you get with your realtor, and then that gets you to settlement. Okay. Now, that's the important piece, because most people forget these three little things here, but let's talk about these because we actually want to help you get into the house. Okay. Now, Sherry did mention the fact that these are the 5 categories that make up your credit score. There are 3 that you can specifically deal with and sort of have a very good influence on that make up your credit score, that you can improve your credit scores in the next 60 days. Easy. No harm, no foul. Number 1, in order to build credit, you must pay a bill, and that bill must be reported to the credit bureaus. So remember, it's only installment accounts and revolving accounts. So if you're someone where you're like, you know what, I don't want to pay anything, I just want to pay everything cash, I don't borrow money. If that's you, you're probably harming yourself, because at the end of the day, if everything goes cash, there's nothing on your credit report. So you have to pay a bill, and that bill has to be reported to all 3 credit bureaus, because there's no law that states that any creditor has to report to all 3. Okay, so you can go and buy a car and it only shows up on TransUnion. You can go and get a credit card and it only shows up on Experian and TransUnion and Equifax. It doesn't show up on TransUnion. So you have to make sure that the bills that you're paying do report to all 3, and you can always reach out to your creditor and make sure that all 3 that they're reporting to all 3. Number 2, you want to keep your revolving accounts below 30%, just like Sherry said. Now that puts you in the good category. If you want to maximize your score, and I always tell people when you're looking to buy a house, you do want to maximize every single category. You actually want to keep that below 9%. 9% is in the excellent category. You're going to get every single point possible from that account. You will lose a few points if you keep it close to that, 25 to 29% threshold. Once you hit 30% and more, then it actually begins to lower your credit score very quickly. If you're above 74%, you're really not getting very many points, or you're not getting any points from that specific account. And you want to keep in mind that there's 2 ways that your credit utilization is being calculated. Number 1, by the individual accounts that you have, the individual credit cards. And on the other side, it's by the overall credit utilization. So it's 2 sides to that coin, not just one. So you want to make sure that your overall is also below that 9% if you want to maximize that score. Also, you want to focus on improving your credit report and not just the score. Okay, the credit report is important, not necessarily the score, because whatever's on your credit report is what dictates that score. And what most people don't understand is there's like 30 different credit scores that are out there. So when you're looking at Credit Karma, you're looking at your Wells Fargo account, or you're looking at your Capital One, and everyone's giving you all these credit scores, those are usually not the ones that the loan officer is going to be looking at. That's actually going to be your FICO 2, 4, and 5. So if it's not specifically FICO 2, 4, and 5, it has nothing to do with your mortgage score. So we don't really want you to focus on that. We want you to focus more so on what's on your credit report. Do you have any negative information within the last 2 years? If the answer is yes, then you're probably going to have to come and speak to someone like me to make sure that we can get you up to a 660. Extremely challenging if you have any negative information within the last 2 years. Extremely challenging to get above 660. You can qualify for FHA, very difficult to qualify for conventional, but the difference is, and we ran the numbers on a home that was $350,000 over 10 years, because the average person stays in their house for 7 to 10 years. So we looked at the 10-year line. You would pay $60,000 more with an FHA loan versus a conventional loan. So I definitely want you to sit down with your loan officer and make sure that you can get into a conventional, not just an FHA, unless you're stuck between a rock and a hard place and you have to go FHA. And then lastly, it's never a good idea to pay an account that is in collections until after it is confirmed that the debt collector has a very valid claim on that debt to collect. Because the reality is that whenever you don't pay a bill for 6 months, that account gets closed by the original creditor. They write it off on their taxes, and then they sell that account to a third-party debt collector. So for you, if you try, let's say, for example, I had Sprint, they're no longer here, right? but I always use Sprint. Let's say I had a Sprint account and I didn't pay my bill for 6 months. Sprint closes that account, sells it to a third-party debt collector. I try to call Sprint to pay that bill. Sprint's going to tell me they no longer have an account for me. Okay. Then I go and talk to the third-party debt collector. They're going to tell me that the bill's XYZ, but the reality is they usually don't have any opportunity or any real valid claim on that debt. So someone like me has a very good chance of getting that removed from your credit report. And then you don't have to worry about paying that debt. It's just gone because they won't be able to prove it in court if they can't prove it to someone like me when we're challenging everything through the credit bureaus. So keep that in mind. Paying a collection account does zero for your actual credit score. Let me say that again. Paying off a collection account does zero for your actual credit score. So if you're trying to buy a house and you're looking at all these collection accounts that you have, paying all those will do nothing for you unless your lender specifically tells you that you cannot get the loan with those balances on there. And if that is the case, I highly recommend that you simply negotiate the debt. Don't pay full price. You can negotiate it a lot of times anywhere from 28% to 40%. That's where you want to go if you're going to do that. Next, I'm in credit repair, guys. So understand that credit repair is a two-step process. Number one, we remove negative information from the credit bureaus, but number two, you have to work on the credit building side. Now, we mentioned earlier, and I think it's on the next slide. No, I think I took that one off. Sorry. So the way that it works is number one, let me go back. I'm sorry, it's over here. Here it is. So you have your payment history, 35%. That's awesome. You have capacity or credit utilization as 30%. That's cool. 10% comes from types of credit. Now, this is the part, the part that people understand. We recommend that all of our clients carry 6 total accounts, at least 4 revolving accounts, AKA credit cards, and at least 2 installment accounts or loans. Now, the one thing that you have to be careful with if you're someone with student loans is that if those student loans are in deferment, you're not actually building payment history because you're not making any payments. And remember, you have to pay a bill in order to build credit. So you have to make sure that whatever loans that you have that are reporting on your credit reports, you're actually making payments towards those in order to build it. Now, they will help you build your length of history, as Sherry mentioned. But when it comes to payment history, which is 35%, it's not going to help you at all. If you send your email to Sharetta or Ashley, I believe, I'm going to give them something called a guaranteed approval guide where it'll have a list of accounts that you can open. So the loans, you won't have to worry about going out and try to apply for a loan and getting denied. It's a guaranteed approval loan. It's a reverse loan. So it's almost like a secured loan where you pay all the money first and then they give you the money at the end. You don't just ask for a loan and they give you money upfront, right? That's how a normal loan works. It won't cost you any more than 15 or 25 bucks. And it will do absolute wonders towards your credit score if you're someone who either doesn't have any loans or you're someone who has student loans who are in deferment. You get 2 of those, that's going to help you out. If you're someone with 0 credit cards whatsoever, you definitely need to go through that guide, get at least 3 of those credit cards. I recommend getting all 4. That's going to help maximize that category of credit utilization so that you can be like Sherry and get close to that 847. Now, you won't get that far right away. It does take years to build a credit score that high, but if you want to get above a 700, this is something that you can do over the next 60 days, and you should be very close, as long as you don't have any negative information sitting on your credit report. And if you have that, come and talk to someone like me. We'll take care of you. Okay. So 2 sides: credit building and credit removing negative information. The last thing I'm going to talk, second to last, thing I'm going to talk about is the score that's actually used whenever you go to buy a home. So there's 2 providers of FICO of credit scores. One is FICO, the other is Vantage. The one that's going to be used by the lender or the loan officer is usually going to be your FICO 2, 4, and 5. Anything else really doesn't matter. But once they have those 3 credit scores, they're then going to drop the highest score and drop the lowest score and keep that middle score. So that's what you want to pay attention to, is your middle score, because that is going to be the one that's actually going to be used when you go to buy a home. And then lastly, you want to be sure that you remove any disputes before you attempt to buy any homes. Now, I also have a dispute removal guide that I'm going to send to Sherry as well. So if you're someone where you've been challenging information and you're not quite sure how to get rid of those challenges when it's time to buy, then you can just send your information to her. She'll be happy to send it over to you. It's really simple. It's a simple phone call to all 3 credit bureaus. If it's Experian, you can actually send in a fax and they'll take care of it. Within 5 days, all those disputes are removed, and then you're able to go in and apply for your pre-approval application. The reason why they can't do that is if something is in dispute, a lot of times it won't show up on the loan officer's credit report because it's in dispute, and it can't count towards your credit score, so they can't do that. So you'd have to remove everything out of dispute first, and then go and apply for your pre-approval application. and then you would be good to go. So that is everything that I have for you guys today. Hopefully you found that extremely helpful. If you have any questions and you are someone maybe that is sitting with negative information on your credit report, you can go to this website here, book a free consultation. I always brag that our free consultation is significantly better than anybody else's paid consultation. I guarantee it. We don't hold anything back. We let you know exactly what you need to do, not only to improve your credit, but also what you need to do to get into your home. And that's all for free. Okay. We're here to give back to the public, and we know that there are way too many people who are not in homes that should be. Secondly, this is my information if you want to reach out. So email, my Instagram handle, and lastly, the phone number if you need to contact me by phone or by text. We are good to go. Okay, so that is all I have for you guys. Thank you very much for your attention, and good luck in the home buying process.
Thank you so much, Jonas. That was awesome as well. I think we have a few or couple comments and questions in the chat. If you
Sure.
guys can stick around. I think, Ashley, are you able to see them? Please call out their first name to let them know that we have pinned them to the top.
All right. So let me see. I don't want to mispronounce your last name. So it's Andrea, I think. Last name Scutelaro. She said that her school loans are killing her debt to income. They are current, but it's 40,000. Then we have another one, Kalia Clark. How soon can your credit recover if you pay your utilization down to 30% or less if it's currently high? Then we have another one, Kalia Clark.
All
Oh,
right.
your microphone's going out.
Oh yeah, I think you have two screens up, Ash. Mute one of them.
Oh, okay. Let me.
You're fine. You're fine. So the first one was more of a comment, I believe, from Andrea. She stated that her student loan debt of 40,000, I'm not reading it, is killing her debt to income. So I do know that that kind of goes into lending a little bit, but is there some type of spiel that you would give your client?
Absolutely. So whenever it comes to student loans, if you're not paying on your student loans, so in other words, if they're in deferment, which most people's are right now just because of what Joe Biden has done, which is super awesome, by the way. If they're in deferment, then they have to essentially go by a 0.5%, I believe it's if it's FHA, or they're going to go a full percent if it's conventional, or in the other packages, I'm not sure. But most people do either FHA or conventional. So either a 0.5 point or 1 point of the total. So if it's 40,000, then it's either going to be $200 or $400 that's going to actually go towards your debt to income ratio. Depending on what your income is, you can always go to studentaid.gov and you can apply for an income-based repayment plan. Whatever that repayment plan sets at, that would be the actual number that goes towards your debt to income ratio. So if it's beneficial for you, and it never hurts to go through that process, because you don't have to accept until you get to the very end, but you can still find out what it is. So if you go and find out that you can get on an income-based repayment plan for like $100, and the other side of it is if you keep it in deferment, then it's going to go $400, then it's much better to just go ahead and get on that income-based repayment plan. And once you have that, it depends on the lender. Some lenders will use that offer of the income-based repayment plan, and some will actually have you get on it where you have to start making payments. So in that specific regard, you have to speak with your lender, but that is the easiest way that you can go about it, where you can lower that debt to income ratio impact. So income-based repayment plan, that's usually going to be less than whatever the 1% is, and then you go with that.
Cool. All right. And I think, Andrea, we're about to work together pretty soon. So it's some good information. I just thought about her last. They were like, yeah, okay. She's almost mine, not quite mine.
Right.
And I'm looking forward to having her. And then Sherry, can you take a stab at the question regarding, I believe it was credit utilization? If you need it, repeat it. Actually, could you repeat the question from Kalia? Now she's probably extra muted because I can there she goes.
Yes,
Yeah.
I did mute myself. Okay, go ahead.
All right. So Kalia's question is, I think she's pinned to the top here. Oh, let me see. I know it was about having, okay, how soon can your credit recover if you pay your utilization down to 30% or less if it is currently high? And basically, I guess, killing your score.
I think I went ahead and commented, but pretty much it depends. It could be anywhere between 30 days when they send the information over to the credit bureaus. So you want to keep mind of your statement date, which is different from your due date, and your statement date is right when they report everything that's going on with your credit. So if you paid it down before then it'll get reported and it should be updated within 30 days, but it all depends and vary, right? We can't control that, but it should go up if you keep it down. A lot of times people pay it down and then they use it again and they're like, well, wait, what's going on? So it'll automatically fluctuate. So it's just a matter of depending on what you want to do and when you want to do it to see that increase and how it will impact what you're trying to do.
I'll read off the next question. Thank you. And then I have one from the Let's Talk Credit chat. I saved it so that she wouldn't be forgotten after this next question that's in the chat. So there's another question from Jay. Will delinquent accounts automatically fall off my credit report after 7 years? I give that to you, Jonas.
Not necessarily. Okay, I know the law states that all negative information that reports on your credit report needs to be deleted after 7 years, but there are these unscrupulous people called debt collectors. Okay, so normally the answer is yes. Negative information only stays on your credit report for 7 to 10 years. 10 years if it's a bankruptcy, 7 years if it's just about anything else. The issue that you run into is, let's say, for example, we'll use my Sprint example. So I had an account with Sprint. I didn't pay them for 6 months. They charged the account off. They wrote it off on their taxes. They sold it to a debt collector. Now the debt collector is trying to get the money from me, right? So whenever they charge that account off, let's say it's today, so July 13, 2022, technically speaking, if the charge off happened today, then yes, it should fall off in 7 years, 7 years from today, right? So July 14th, 2029, it's going to fall off. Or I'm sorry, not July 14th, August, sorry, because it goes by the month. So August is when it will fall off. So whenever that would be the case. However, what debt collectors do is they do what's called re-aging the debt. So what they would continue to do is just keep putting CO, which is the charge off mark that is negative. So technically speaking, even though it should fall off in August, on August 1, whenever that information gets reported, it's not going to fall off because they're going to keep re-aging that debt over and over and over and over and over again. So essentially would stay on my credit report as long as that company is most likely going to be in business because they're doing something illegal. And most people don't even understand. And this is why I always tell people you have to come and speak to someone like me, where we're going to sit down and go over your credit reports, because at the end of the day, you think, well, man, I had this, this Sprint collection account from like 2005 and it's still on my credit report. Why? Well, the reason why is because they've been re-aging that debt the entire time. So in reality, the way it should work, yes, 7 to 10 years from any negative mark, it should fall off. But in reality, the way that it actually works is that people will do illegal things to keep that negative information on your credit report. And so it won't automatically come off. Not all the time.
All right. So this question is, I'm going to probably censor or not disclose the name. I'm trying to word it. So it basically speaks to spousal financial abuse. And is there any credit repair dispute process that can, in so many ways, free you from the responsibility of it without you lying, basically, and saying that the debt does not belong to you? How do we move forward?
Nope. I wish there was more to tell you. No. Listen, you guys are married, you signed a contract. And so when you get a divorce, that doesn't stop you from having to pay back that loan, right? So the same exact thing goes for a cosign. It's not just a spouse. If you cosign for any document, once both people are on there, it does belong to both of you. So there's no court order that's ever going to split those debts and make one person, responsible, and then it's going to not affect the other person's credit score. You're both going to be responsible. Now, you can go through credit repair and seek to have whatever that negative information is removed, but you guys do have to handle whatever that situation is one way or another. So if it's already gotten charged off, then you're probably going to be fine. You can just go through credit repair and hopefully it'll come off in that process where you won't have to worry about paying anything. But if it's, let's say, for example, a repossession, which there is still a possibility that it will come off, but those are definitely not guaranteed, then that's something that you may have to kind of tough out. But no, so the answer is no. There's nothing you can do really, except credit repair.
Okay. All right. Any other questions, comments in the chat? All right. Closing remarks. You guys did a good job putting your information, and I'm gonna also drop it on the Post-it Live so that they can reach out to you guys. If you are accepting new clients, turnaround times, anything like that, that you guys, I'll let Sherry have the floor, and then we will, I believe, end it.
Thank you so much for having me. Like I said, my information is on Facebook, I'm Sherry Berry Scott, but you can find me on most social media and handles Sherry_850 Credit Queen. You guys, you can find me there, or you can just tap into my Facebook where I'm tagged on this video and you'll be able to find me because all my information is linked there. But knowledge is power, knowledge is key. You want to make sure that you're educated, ask questions before you make any move. There's no such thing as a dumb question because we are all learning and we all need this information. So just reach out if you have any questions or you just need to understand the process a little bit more. I'm gonna pass it over to you, Jonas.
Okay. Yeah, no, so my closing words, I always like to say that it is our job to be the change that we wish that we can see. So I started off as a real estate agent and then I switched over to credit because I realized that there's a larger pool of people who wanted to buy a home, but they couldn't. And at the end of the day, it's just like Sherry just said, knowledge is power. And my favorite questions to ask usually has to do with who, not how. It's not how do I do this, it's who can I speak to that's going to help me understand what I need to do to fix this thing, right? So the people or the things that we do as people, our job is to come out here and make money doing the things that we love to do. So if your job is to get out here and save lives because you're a doctor, you don't need to be out here focusing on your credit. If your job is out here being a school teacher, then you should be helping those kids do better. You don't have to be out here learning how to fix your credit, do all those types of things. You come in, you speak with a credit specialist, you go and you speak with a loan officer, you go and speak with a real estate agent to make sure that those people can protect you and make sure that you get exactly where you need to be without having to worry about doing anything. Don't be too proud to talk to people. Our job as human beings is to connect at the end of the day. That's what we do. We connect with other people. That's why we are here, right? We're here because we want to connect with you and we're trying to show you that we understand exactly what you need to do. So you can sit here and be like, oh, I don't want to sit here and talk to people. I don't want to, they're just gonna be pushy. They're gonna be this. No, sit down and talk to them so that you can get exactly where you need to be. There are people from 4 years ago that still refuse to talk to me and they still aren't in that house. Okay. Don't be one of those people. Pick up the phone, talk to one of the people that's on this call and get yourself into your brand new home without wasting any money or wasting any of your time. That is my final word.
Thank you. Guys, if you are interested in credit consultations, these guys are giving it to you for free. And if you go ahead and drop it in the comment, or you can come out on the side and talk to me and I'll get you plugged into them. Also, if you feel like you're ready to make a move, I'm here. I'm your lender. I am a direct lender. I am eligible to work loans in 41 states. So most likely I'm going to be able to help you. And the good thing is, if once we start an application and I see a little small need for a bump in credit, if I can't get you there, I can just send you right over to one of our partners and they can send you right back to me without a big break. Maybe you'll lose a couple of months, but you'll still be on your way, right? And then if you need, I have plenty of realtor partners. My number one hitter in Birmingham, Alabama, she's connected in Mobile as well, is my girl, Ashley, and I'll let her close us out, guys.
I would definitely want to say thank you, Jonas and Sherry, for definitely providing that good information out to everyone. I know a lot of times you're so scared to even think about starting the home process, buying process, because you're not sure if your credit is where it needs to be. So great information, and thank you guys for that. So yeah, so like Sharita said, that I am a licensed realtor here for Alabama. I'm currently in Birmingham, but I do work the whole Alabama. So if you guys are ready to get ready to purchase at home, just call your girl up and I'll be happy to help you guys. Thank you again for joining us this Wednesday evening, and I hope everyone have a great evening.